So hi guys, welcome to another video. My name is Gashar Gashehi, Forex District Academy and Community Mentor. And today I'm going to teach you guys, I'm going to take you through the Forex trading sessions and the time zones that are there in the Forex market. And not only the Forex market, but the industry itself, the Forex industry all together. So today we're going to talk about three things: the Forex time zones. We're also going to talk about a simple introduction to Forex market structure. And we're also going to talk about maybe some small anatomy of the Japanese candlestick. So what I have on my chart currently is babypips.com Forex market hours. As you can see, guys, this is the Forex market time zone converter. Currently on 12-hour time, and this is Cairo GMT +3. So it really depends on where you are, depends on your zone, so that you can understand what I'm looking at. So I'm in East Africa, I'm in Kenya, and that's why I'm using a GMT +3. I can only choose a Moscow GMT +3 or a Cairo GMT +3, and that will automatically change the time zones to my liking and actually understand what forex trading sessions we do have in an entire day. So the forex market is open 24 hours in a day for 5 days. That's from Monday to Friday. And now this actually helps me understand. So if you guys can see it here, this is Saturday 7:22 a.m. GMT +3, and the market is closed for the weekend in all trading sessions. So we usually do have, not usually, there are only 4 trading sessions in the forex market. There's a Sydney session, there's a Tokyo session, there's a London session, and there's a New York session. So if I had if I would have made this video, between Monday to Friday, they would have given me, this would have been moving, so that's at midnight to around 11:59 p.m. So the first session of the day is the Sydney market. It starts at midnight and it runs all the way to somewhere close to around 8 a.m. 8 a.m. Kenyan time or GMT +3. And then the Tokyo session is the second session of the day, which starts roughly around 3 a.m. and runs up to around midday GMT +3. The third session is the London session, which starts around 10 a.m. That's the London Open and runs close to around 7 p.m. And lastly, but not the least, we have New York session, which actually starts at 3 p.m. and runs to midnight. So if you don't know how to convert your time depending on where you are, you can actually use babypips.com. It's for free. I'm not marketing anything, but it's a free tool that you can use, and just actually open it on your phone or in your computer on your desktop, and it can actually tell you what session you are at so that you can know how best to trade whatever the session you are at, or best how to manage your day trades or intraday trades. So another thing is the overlap. I'll be teaching you guys about the overlap because you can see Sydney starts at midnight, runs up to somewhere close to around 8 a.m. But the Tokyo session right here, the Tokyo session starts at 3 a.m. and runs to that. So the overlap is between 3 a.m. to Sydney close around 8 a.m. That's the overlap between the Sydney session and the Tokyo session. And then we have a small overlap between the London opening at around 10 a.m. and we have a Tokyo running until midday. So we have a very, very small sessioning of where we have an outburst of the market, and thus the greatest overlap that we usually have is between the London and the New York session. That's where the trading volume is the highest, and actually it's also provided in babypips.com. So you can see this graph down here. So it goes up, it goes down, it goes up, but its highest is between these overlap. the let me grab this, yeah, between the overlap between right here 3 p.m. GMT plus 3 and up to somewhere close to 7 p.m. So that's where the trading volume is at its highest. This is the highest peak. And actually, once we hit a London close, the slope starts going down, 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 down until we get to New York close. So that's a little summary, and you guys can actually watch this live. You can actually watch. The best part about babypips.com is once a session is closed, they'll actually tell you that it's closed. Now we're done with the Sydney session. We are in the Tokyo session. We are in the New York session. And it'll actually show you that the trading volumes are really, really good once we jump into the overlap between the London session and the New York session. So done with that, let's jump into the Forex market structures. And actually, these are very, very complicated thing, so I'll actually just do an introduction to it. So if you guys can remember the first video that I had, it was still Euro USD, and here right now for beginners or novice traders who want to learn the forex market before you even understand how a Japanese candlestick forms or even the anatomy of the Japanese candlestick, it's really, really important to understand forex trends. So we do usually have three forex trends. We have an uptrend, we have a consolidation, and we have a downtrend. And or I'll add something else that I've constantly been learning from ICT, Michael J. Hudston. It's known as the seek and destroy. It's a pattern that can form in a session, like in the London, the New York session, in an Asian session, or can actually happen in an entire day, can happen in an entire week, or even a month, or even greater than a month. So it's not so much of a trend, but it's a pattern that really, really, as the name says, it's a seek and destroy. It seeks whatever orders that you guys are placing in the market, and then it destroys you by hitting your stop losses. So I think that's a little advanced. I'll actually have a video on that on maybe an intermediate class. So for the beginners, here we have so many trends. This is Euro USD. I'm currently showing you a daily time frame. So it means that you can actually see the candles, because the candles would have been easier to know that the daily candles opening and closing price, but I actually just want to show you guys about a trend. So here we had right here, this is July. This was the highest prices experienced, I think, this year. Yeah, these are the highest prices experienced this year. No, not this year. This was July last year. So this is we're talking about last year, 2023, because the beginning of, so this was the beginning of this year, and this is last year. These are the highest prices experienced last year, and this is 2023. That is the beginning of 2023. The highest prices experienced last year, the lowest prices experienced last year, and these are the highest prices experienced this year. So I don't know about the elections, but maybe on a higher time frame, I have a conviction. I speculate that the market will be going above the highest prices of last year, which were experienced. So this is a downtrend. So from July 2023 last year up to October 2023. So we had several 3-4 months going down, and this is the definition of a downtrend. So we can actually use an arrow and actually see the trend of the market right there. So that's the definition of a downtrend, and a downtrend is characterized by lower highs and lower, sorry about that guys, lower lows. And now here we have a different one. So from October, then we pushed up to the end of the year right here, December 2023, just before we jump into January. So we almost had 6 months or 5 months of a really, really good downtrend. and then very massive uptrend. So this is a downtrend, and this is an uptrend. An uptrend is characterized by higher highs and higher lows, and then we have a consolidative trend where you have just something small where the market's not moving. I think I'll just use a rectangle for this. Let me first remove this, and here we have a very small consolidation of price. So whatever we had right here was after a really good downtrend. We first consolidated to gather prices and to gather orders of whoever was buying the euro paired with the United States dollar before we had this movement up here. So whatever happened here, this was a consolidation. It was no downtrend. We had a very good visible downtrend. Then we have a really good pump to the upside. So this was the market was just consolidating around here before the market actually expanded up. So we in between downtrends and uptrends, we can have consolidations in the middle, and you can actually do this by practicing in how to see them before we just jump into another trading trend. We can, not usually, but can have consolidations in the market. So look at this. This was a really good downtrend. The market gathered orders around here. These are daily time frames, so these are so many candles. These are actually from July 2024, 13th, close to around almost half a month. So this is 1st of July. So from June, sorry, not from July. So from June 13th to around July, we consolidated, and then before we had this run up here. So the same with here. We had this little small consolidation of the market up here. The market gathering up orders before we had all this downtrend. So this is what known as a consolidation or a sideways trend. So now let's jump into the meat of the candlesticks. So for a candlesticks, this is what we have. So we have bullish. This is known as a bullish. This is known as a bearish trend. So for a bullish trend, we can see that these are the opening prices right here. We push down, making the low, we push up, making a high, and then we slightly go below the highest prices, but above the opening prices, and then we close right there. So if this is the trend of the day, and let's put this at 1 million, let's put this as maybe 750,000, let's put this at 5 million, and let's put this at around maybe close to 3 million. It means that whatever thing you can actually use this as a chart to see the price movement in an entire day. If it was Bitcoin, and we had the prices of Bitcoin currently maybe at 67,000, and maybe had the lowest prices at maybe 60,000, and then had the push high up to 70,000, and maybe by the close of the week or the month or in 3 months or even the year, we had a little we have a little slide down from the highest prices experienced. Still bullish. It means that we are up from 67 close to around maybe 70,000, and maybe just a small push down, but the trend is bullish. So let's put an arrow showing where the market's going. And then this is a bearish. I actually have a green for this and a red for this for specific reasons, because once we jump into the candlesticks, we'll actually see more of the green in bullish trends or uptrends, and then the red in bearish trends or downtrends. So we have the opening prices and have the high of the month or the day, whichever, and then we had this push down, and then just before we closed, no, we had the low just before we jumped up a little bit, but still lower than the opening prices. So if it was still, Bitcoin, and we had a bearish trend or a downward trend, we'd had the opening prices, then the market pushing up and then pushing down, and then By the time we close, we are lower than the opening prices. So this is how we characterize a bearish trend. So I'm going to use the same concept now on a candle and show you guys what I'm looking at. So we have the same thing here, right there. Same thing. Open, low, high, and close on this bullish. So how we this is the anatomy of the Japanese candlesticks, and we can actually see this really good from a candlestick, much more better than uh, a line graph. Why? Because this is known as a wick, this is known as a wick or a shadow. So this is known as the upper wick or an upper shadow, and this is also known as a down wick or a down shadow, and this is the body of the candle. So just think of it as a candle and how you have the wick where you actually put your lighter and actually light a candle. So that's how we have wicks on the top side or on the bottom side. We can have both. We can have one-sided. It does not have to be, and we can have a candle without a wick. So the opening prices right here, and then the market went lower, then the market pushed up to create the high, and by the time we're closing below the highs but above the open. It does not matter if even if the close is right here, but still a bullish candle because the closing prices are above the opening prices, and thus we have the same on a bearish candle. The opening prices are up, then we created the high, then we pushed down creating the low. By the time we closed, we were back up a little bit from the lowest prices experienced, but we are still lower than the opening prices, characterizing this as a bearish candle. So if we want to follow price action live from the same, these are the consolidations. Let me remove this. So from whatever trend that you want to follow the market with, and actually see these candles really good. So you guys can see this. We have these weeks, all these weeks right here, and these are really key in analyzing the market or understanding, having a much better understanding in the forex market rather than looking at this. Because if you can see this, I can see this huge wick around here. If I can annotate it, I have this wick right there. So you can see my horizontal dotted line is at that wick. But if I use my line graph, I can't see this wick that was around here. So it's really important for me and for you or anyone doing a forex analysis to understand the purpose of wicks, and actually it created the high of this bearish candle. So the bearish candle had these highest prices around here, and then it pushed down, and also for these other weeks. So I can't also say this other week on a line graph. It's actually floating. And yes, the line graph can tell you the trend, but if you do not understand the wicks, I think you can be hunted a lot in the market, and you'll actually be in really deep troubles because you do not know when you're going to be hunted, where you're going to take your profits or place your stop loss better. So you can see we have bearish and bullish candles, bearish and bullish candles, but generally we are in a downtrend. So in a really good downtrend where you see your bullish candles or your green candles, it means that's known as a correction or a retracement in the market. So you can actually see we were in a really good trend. We retraced a little bit, and then we had this wick to poke anyone who had their buys somewhere or had their stop losses somewhere before we get into a downtrend again. We had a little correction, and then a downtrend, another correction, and another one just to hunt people out. This is a turtle soup before we continued with the trend and have small retracement. So in a downtrend where you have really good trend going down, Any green or bullish candle means that there was a small retracement before we continue the trend. And that is the opposite when you get into an uptrend. So we're having really good movement to the upside, and whatever down red candles that you can see, the bearish candles, they are the retracement. So we have the trend and a retracement or a correction before we have a trend again and then a correction. But you can't actually see this on a line graph. You can only see lines going up and down, and yes, you can know that this is the trend, this is a correction, this is a trend, this is a correction. But actually appreciating the wicks and actually appreciating the bodies of the candles can tell you more, because this is so trendy. And once we get into another chapter of where I teach you guys about the PD arrays, you can actually understand the concept of how this was a really good trend and maybe was significant of taking out this high and maybe creating another high. So guys, remember, you really need to know how to focus on the trend and actually know the characteristics of a downtrend, characteristics of an uptrend, the characteristics of a consolidation trend. And I'll teach you guys, or I'll say something about a seek and destroy when it actually really matters most, and actually when it's there in the market. I'll show you examples of, and especially currencies that do not have really good volatility or really good volume in the market. So with that, I wish you guys good luck and good trading. You guys be blessed and stay blessed.